Grados here at Grados Capital for our weekly update, weekly prep for February 3rd. And this is also titled Welcome Back to the Trump Market. So, if you were trading, investing, paying attention to the markets the last time Trump was president, this should be very familiar to you. If you weren't, well, welcome to the Trump market. Basically, what I mean by that is that the market reacts to what Trump says. The market takes him seriously, that he's actually going to do what he says. And then, on top of people taking him seriously, he also likes to kind of surprise us, right? He's going in there to flip tables, right? And so last week, if we look at, well, let me just back up first. Let's go ahead and a couple weeks ago we talked about this bull flag on the S&P, and this is the cash index, right? So this is still intact in terms of from a technical perspective. We're going to talk about technicals first, then we're going to talk about fundamentals. But I wanted to open with, a lot of this price action that we're going to get into has been more volatile because of the Trump news and tariffs and things like that. We're going to get into that. But on the SPX daily chart, we had this bull flag we pointed out a couple weeks ago. We had a nice breakout to new all-time highs, a retest. We respected the trend line, and we cruised on back up, failed to make new highs, but we are still in this pullback range. Now, what's interesting is, let's go to the ES futures, which opened last night at 6 p.m. And we are ES futures traders on a short time frame, but we have opened now on a gap down last night, and we are opening in this range back below the lows from this day. Was that 3 or 4 days ago? So, from a real technical perspective, again, I'm pointing out this Trump market. Let's go to the intraday charts. And by the way, with the Trump market, if you are a day trader, this volatility provides tremendous opportunities because we're going long and short throughout the day, right? So the extra volatility on Friday really sent the markets down with the tariff news. Now we're opening on a gap lower, and from a day trader's perspective, this gap is going to be in question of if we come back up to fill it this week, even today perhaps, or if we continue down without filling it. That would be the most bearish scenario. So this is what we call gap rules. When the market opens on a gap, we've got to go fill the gap. How much we do or do not fill the gap tells us everything we need to know about the sentiment of the market. And the most bearish would be not filling this gap. Now, this obviously was, if you haven't been paying attention to the news, this move down was caused by this news that Trump is going to implement these tariffs. I think it's starting today, I want to say, or starting soon. Sorry, I didn't get the exact the exact figures, but there's news that Trump is seriously going to implement these 25% tariffs on Mexico and Canada, and also I believe a 10% tariff on China. Now, Mexico and Canada have come back and they said that they will be implementing retaliatory tariffs, which now seems to be sort of the start of this sort of trade war, tariff war, back and forth conflict that's now going on. And by the way, from a fundamental perspective, if these tariffs are going to be in place, like, this really fundamentally shifts like a lot of global economics, right? 25% to drop all of a sudden, or even to drop in phases, is a hefty amount when you're talking about global corporations moving tons of goods back and forth. This is a huge shift in like economics. So the market is reacting strongly to this. And when we think about, there's something that traders refer to as the ruling reason of the market, which is nothing more than just like what is the market paying attention to right now? What is driving the market right now? If you remember back during COVID, there was a period of time where the ruling reason was like the vaccine, where because the vaccine was sort of thought of as like the end of the pandemic. Oh, once we get this vaccine, it'll be the end of the pandemic. So anytime there was positive news about developments of the vaccine or a estimation to when a vaccine might be released, that would cause a positive shift in the market because that was the ruling reason at the time. Right now, the ruling reason is this sort of tariff war that we've evidently started as of last week, right? So this is the number one thing to pay attention to from a fundamental perspective, and then from a technical perspective, we already have talked about that. The other thing that we had last week was this DeepSeek news. That was this drop. If I go back to my daily chart, we're getting a little bit of lag here. But that was this other drop last week that really was dropped sharply and then was bought back up. This a giant wick here on the daily chart. That was the DeepSeek news. DeepSeek is also something to pay attention to. It threatens everything we thought of with AI if it is true. China is, and this just is what it is. They're known to maybe not be the most trustworthy with some of their companies and fraudulent practices and things like that. And so we don't quite know how serious the threat is. But if it is serious, then it really threatens everything with these tech and AI companies. And so with that being said, if we look at tech as a sector, XLK, so tech came down from the DeepSeek news. Companies like NVIDIA took a big hit, Apple, but the other sectors in the S&P held up. So what I think overall, I've read a lot of articles about this DeepSeek stuff. The overall consensus is that yes, tech may take a big hit, and if tech takes a hit, of course, that is a big portion of the S&P. It's about 30%. However, it's going to be more of a sector rotation. There are other sectors in the S&P like consumer discretionary, energy, financials, utilities. Other sectors that make up the S&P actually held up just fine with the DeepSeek news. So it wasn't a broad sector sell-off. It's just mainly a sell-off in tech, which again, tech is heavy. We have to pay attention to that. But in terms of the S&P in general, we might see as this sort of DeepSeek stuff comes out, or maybe even other companies that may come out in the future that threaten the big AI giants, that we may see just more of a sector rotation where tech, which has really led the market, will perhaps, if this stuff starts to develop, take more of a backseat. But these other sectors, utilities, consumer discretionary, energy, etc., will start to lead the market, and we'll see other sectors outperform tech, generally balancing out and broadening the S&P. So that's my notes on that. Okay. Now the next couple things I wanted to get to here. Let's just go through our normal weekly prep with the events for this week. Last week we had our Fed Day, our FOMC, and they decided to maintain rates, which was expected, and the market didn't really react. The market just kind of stayed where it was. So, but we actually at least got that news out there that the Fed is maintaining rates. So this week, not too much on the calendar. Manufacturing PMI, again, we've talked about this before. Bad news is good news. If the labor market is weak, then that will encourage the Fed to cut rates sooner. So right now they're in a more hold rates higher for longer because they're maintaining rates, as we saw last week. this manufacturing PMI, these JOLTS job openings on Tuesday. Those are all measures of the labor market. Unemployment rate. Oh, that's never mind. Sorry, that's not U.S. But either way, job openings. This economic data, bad news is good news in terms of if the labor market is struggling, we're going to need to reduce rates. So we've covered that before. And let's also look at our earnings coming up for this week. So this earnings calendar, by the way, if you want to look this up and kind of maybe bookmark this page, we got a lot of companies reporting earnings, but they always put the highest market cap on top. So we really only pay attention to the first couple at the top of the list. So we got Palantir today, not really a big market mover, but I believe on Tuesday, tomorrow, we have Google. So that's going to be a big one. Google reports earnings. And then the only other one that I was looking at this week was Amazon. I believe that's on Thursday. Okay. Yeah, Novo Nordisk and Walt Disney are the biggest ones for Wednesday. Thursday is going to be Amazon. Okay, yep, Amazon on Thursday. And there's not much on Friday. So that's an overall outlook for this week. Again, we gave you the technicals first with this gap down, whether we fill this gap up or not. And then, again, the ruling reason for the market is going to be this Trump news, the tariff war. So be paying attention to what's going on because Trump likes to surprise us. Like I said, he likes to get in there and disrupt things, and the market will react to that. And it'll react to that intraday. So you might have a bullish day, first half of the day, and then like we saw on Friday, right in the afternoon, something comes out, boom, big sell-off in the markets. And if you're a day trader, that's a great opportunity. So make sure to subscribe to the newsletter. First link in the description of the video if you haven't already. Also, follow me on Twitter. I'm trying to, I want to get better at posting my daily stuff on Twitter if I'm day trading that day to just kind of be more active there. So anyway, I will see you guys next week.